So for me, it's like from a higher time frame perspective, like I care more about a two-step checkbox, right? Like NFP Friday and previous month 50%. If we're above both on the daily candle, then I anticipate 70% of green days and 30% of red days from the daily candle, right? And what that means is if I'm expecting a green day, right? Because you get more green days when you're above NFP Friday and previous month 50% than you do red days, then I am expecting the low of the day overnight at 1800 or 03, like Austin mentioned, or from 9:30 to 10:30, right? I'm expecting that low of the day to be put in during one of those solid times, right? And then I'm expecting the high of the day to be more towards the close, that 15 to 1600 high a day, right? And then we put the close price in for the daily candle, right? And so right now we're stuck, right? We're above previous month 50%, which is this purple line that says previous month mid, right? And this yellow box is Friday's NFP Friday, right? So we are stuck in the middle. So I'm trying to see, like, if the rumors are true that September statistics show us that September is the worst month for these indexes, right? And over the last 6 years after Jackson Hole, we've had a quarterly pullback, right? So like I can just blindly sell or I can wait, right? And the moment we get below NFP Friday and previous month 50%, then I'm expecting that we get a quarterly pullback. But when we're below NFP Friday and previous month 50%, like we're going to either get two types of pullbacks. We can get a quarterly pullback where we target June's lows, or we're going to get to the quarterly lows like we did in February. After we touch that, and we're going to keep heading down. So intraday stat that I care about that is that I no longer have the edge of 70% green days, 30% red days. Now it's 50% red days and 50% green days, right? Which means I have to really weigh heavier on my intraday statistics, and I just don't anticipate a green day more than I anticipate a red day. Now it's like vice versa. Like if you go into any market in the February to April, like you can see 50% green, 50% red. If we go back to an actual bear market, like we had in 22, right? Let's rewind here, right? You can see just by eyeballing it, like you get 50% green days, 50% red days. Like, so even in a bear market, when you're selling off, right? Like you don't get the luxury of having a directional edge like you do if you're in a bull market, a bull trending market, right? So like right now in this month, like we're at the beginning of a new month, right? And I'm just trying to be patient with which direction, which statistical edge is the NFP Friday and previous month 50% going to give me, right? Let's see, are we still ranging? So we'll go to the next part, right? So now, like that I have a monthly view from my statistical edge. Now I'm going to try to see the weekly, right? Everybody likes to do fractals. I like to do fractals like everybody else does, but I like to use statistics with my fractals. So like now the biggest on the daily chart, we're solving the statistics like are we expecting a green candle or a red candle for the day, right? Where are we anticipating price to go for the rest of the month? On the weekly, we're just trying to solve the simple problem of have we locked in a low of the week or a high of the week, right? And so now how we do that is I use a couple of things, right? I use Sunday 18 to 1930 price, right? Whatever that zone is will equal out to this blue box. And then Tuesday 9:30 to 10:30, which will be the orange box. If we're above both of them, then I can say, hey, guess what? The low of the week is more than likely in, right? And then I can shoot for whatever targets I am from an intraday standpoint from a weekly perspective. Well, right now we're stuck in that 18 to 1930 box, right? We can see that we looked at the previous week candle, right? We just went up, like this is the footprint of the wick of the week, right? So you can draw that out. This was the high of last week, and this is the close, right? Right there, right? We just went up to 50% of that footprint, and we're trying to figure out what we want to do from this point, right? Now, we can't lock in a low or a high of the week. It's too early to tell, but what I can tell you is this green box right here, right? From a weekly perspective, right? Is this green box is half a 50 basis points to the downside, right? And we can see that over the last 56 weeks, we have hit this green box 7 out of 56 of the weeks, right? So it's a common target for the low of the week to come down and touch this. Doesn't mean we have to, but like I'm aware that, more times than not, we have come to this this green box to make a low of the week, right? And then the same thing to the upside, this red box right here, we can see like 50 basis points to the upside, right? We hit that 94% of the time. We've already hit that, right? So if we move up to 1%, right, 91% of the time we hit this, right? So now we know we still have targets to the upside that usually get hit, right? So 91% means 51 out of the last 56 weeks, right, has hit at least 1% to the upside, right? And then 1.5, which is at the start of our red box, we know that 82%, 46 out of the 56 weeks we've hit that. And then the top part of the box, which is 2%, we know is 34 out of the 56, so 60% of the time. So we know that we're just in a range and the market hasn't shown its hand yet when it comes to has the low of the week or the high of the week in form. So we know that that edge is not there yet, right? And so we are still early in the week and we're still waiting to see that weekly candle play out, right? But what we do know is this much, right? We are rejecting the 50% of last week's wick. So we went to a weekly candle, right? This is a weekly candle. And we can see that from here to the high, we're rejecting that 50% of the footprint or the wick, as most people call it, right? And that's what I'm referring to.